Hello, I'm back again here. Hopefully, I didn't mess up the recording. That would suck because I stopped it. I really hope it's continuing and just going on with that. Otherwise, that it's gonna suck because I'm gonna spend some time here and it's not gonna be for anything. But anyway, AU here, the Orion. Remember there are two tickers called AU. One is Anglo, and this is Orion. Looks like continuation there. Amazing. Yeah, BRC still looking incredible. Again, like mentioned many times, looking absolutely gorgeous. Check out previous videos on that one. Equity metals. Oh, finally, we are breaking that wedge, which is 1 year long. First position I took there. Happy days, very sad days, right? That was not the start. Tried again, tried again. Forming the wedge, breaking out. And yes, I bought that break as well. So the idea with equity metals is that we are now controlled by this overall parallel, and you can actually measure from the low here because you have a low range for basically 10 years. This stuff here, I don't really know what happened. It could be some exchange things. I don't know. Again, you take that to the upper side, and we're actually getting to the upper yellow. So again, a greedy target. If we get to there roughly 2.2, yeah, we're gonna sell it all and be very pleased with that move. Equity metals, if we are to make the Bollinger Band and the momentum our favorite setup of all time. We have we could go to the monthly maybe. Not really. We have momentum inside Bollinger Band. We're getting the expansion, the first signs of expansion. We need one more week with a higher close to get the confirmation of the expansion, but that means we're going to go way higher on equity metals. Looks great. We're going to remove all the indicators, whatever. So yeah, I don't really want to dive into more. OCG we could quickly do here. Again, breaking out, back testing, right? Back testing the 10, 20-year trend line here. Perfect. And now again, we have some resistance just above here that we're actually fighting with as we speak here. But again, for sure, when we take that high, 34 cents for sure, then we're going to go into higher prices. But it looks really constructive there. SUP, one of the best setups we've ever seen, going higher, really nice. I'm not considering selling anything until we reach roughly, 1.55, give or take. And even then, right, because we have so much good things here. It's a big triangle high, the midpoint. But overall, I do expect this one to actually, break out in some way and basically play the yellow. I mean, this could be one of the best trades we've ever made. Hopefully, again, greedy targets, 115, excuse me, 15, 19, 15 up here. I know very greedy and it won't happen tomorrow, but that is if we're lucky and if we have a position at that point in time, we're going to be all out. But I really like SUP here for multiple reasons, which I has explained. SVM here is breaking out, doing the back test, and now is again we have the short-term resistance now at the breakout high 5.2. Overall, one of the better looking setups because again the breakout we took was actually this boy coming down to here, and yeah, looks a bit similar like the SUP, but the SUP had more good things for it. But this is definitely still looking good. Looking really, really good. PLG, I want to show you. Again, if you want to get into platinum miners, it's about effing time for PLG. All the others, very pleased with the entries we've made. We did that when platinum broke. Look at ANGPY here. Again, entered at 6.5-ish, now at 9. What have you, Generation Mining here, entered there at 20 cents. Huge move, looking fantastic. IMPUI, again, the entry roughly 7, now at 10, $11, perfect, and so on. PLG here, which was a stock that I would recommend once we break the golden here, which should happen depending on how it does it, of course, but roughly 185. Again, it depends, but that trend line coming down there, that is the take in for us. And again, if we can get a little drop before we break, yes, stop loss there, ready to go. Good. Some ratios. I have some ratios for you. Again, this is just on the fly, nothing planned really. Just want to show you some, in quotes, random stuff. I saw this one here earlier today. Uranium miners, when you take the oil divided by the metal, basically how much do they make from each uranium pound that they take out of the ground compared to the energy? Look at that beautiful long-term inverted head and shoulders, breakout back test within a flag resumption. Therefore, the miners are making more and more money. At least, what they have in the ground is getting more and more valuable. Um, so yeah, funny one here is actually URNM divided by Bitcoin, a ratio that we have been looking at every once in a while. And we have this very large falling wedge here for like 2 years. And also look at the golden going here. You can see we have one there, up here, and then touched it there, breaking down, getting back in, and doing some funky back test now. And my view is that if we ever start to trade north of this one here again, like that, for instance, or whatever, then look at that. We have a small bottom structure and we are potentially bouncing from the lower trend line. Again, yes, we got a little bit below. I know that. But also we're breaking the wedge, right? 1, 2, 3. Meaning from that point on, URNM will be outperforming Bitcoin. Interesting here. So if we can start to gain, let's call it like 10% here, maybe 12, in favor of URNM against Bitcoin. URNM is a long-term way better play than Bitcoin, which is a good measure. Really good. Also here, URNM divided by the NASDAQ, breaking out backtesting resumption of that, bull flag or channel, whatever we want to call it. So URNM is now in the driving seat against the NASDAQ as well. Stage two. Stage two. That's good. SILJ here, you can see we could have a moment here if, again, if URNM breaks out from there, uranium will be a better play than the SIL. Or if we start to break down from here, SILJ will be a better play. We are invested into both, but again, it could be a good sign or like a guide of where to maybe place most of our investments into. Uranium divided by SPY, clearly uranium now is outperforming again. And it's funny, people making fun of uranium, but actually we are up 120, 140% against the SPY and almost 100% against Bitcoin. Excuse me, the NASDAQ, the uranium miners, that is, they are outperforming heavily since the COVID lows. And people saying that that uranium hasn't done anything. I don't know. To me, they have. To me, they for sure have. Look at this again here. Uranium miners, the ETF, the URNM, to be sure, is breaking out against the spot price itself. The first target we have will almost always be the highs of the structure, which is up here at 75, 0.75, and we are now at 0.7. So we still have almost 20% before we hit anything major, in my view. Uranium here divided by XLE, a ratio that we have been looking at. Boom, look at that, a cup and handle within a wedge. We could be in a period where uranium miners is a better play than the overall energy sector ETF. That is a good milestone to actually break out from. And it happens at roughly 0.6, roughly. Very interesting. Here we have uranium divided by nat gas. Look at that. We could have a bottom structure in place plus a bull flag breakout. I think it will happen again. The confirmation that uranium spot will outperform nat gas happens at roughly 24. 24. 24. AG, First Majestic, breaking out from a 4-year downtrend against silver. And silver is looking fantastic. But hey, AG, as we have been talking about and showed on the charts, looks really good here. And I think it's great, 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 great value still for AG down here. Look at how close we are to actually punching a big hole, massive hole in the ratio of GDX against gold. We could do a double rail here actually to just to show you how big of a moment we could be at. Again, we are trying to break this rail and actually getting above these highs here. The ratio says 0.016. Anything above that, 0.16, 0.0163-ish, somewhere around that. Again, the gold miners will smash gold. And from that point on, you should be more invested into gold miners compared to the gold. And gold looks great. Again, we just looked at gold potentially going from, 3,300, whatever it is, to like 4K. But that will be nothing compared to what the gold miners will be doing during that period, most likely. So, looks great there. The juniors have actually already, not the big one, not the big breakout, but internally, very pleased with whoa, the 2020 high trend line breaking out. That range there we have broken out and are both flagging now. We're going to go to there most likely. Gold miners looks incredible in the ratio, but also on the chart itself. It's just, yeah, it's really, really nice to see. SPX here divided by HUI. We want this to go down, right? Because we are invested into the gold miners and not the SPX. Big breakage here, which we said, yeah, big moment here. Breakdown, very deep backtest. Breakdown, boom, backtest off the flag. Very bearish overall in the ratio, meaning the HUI, the gold miners index, is better than SPX when looking at it long term. Target is still down here. We are now at 14.5. Target is roughly 10, 11 here. So we're looking at 20, 30%, underperformance by the SPX, meaning the HUI will overperform against the SPX in that period. Fantastic. And here is, this is actually quite neat because you can see we actually tagged the upper here. And this is the ratio where we measure gold miners divided by a ratio where oil and gold is, we're looking at how much energy it takes in order to get the gold out of the ground. So how profitable are they? Right, so we have this actually almost a 20-year flattish, bit uptrendy, breaking above the highs here, flagging here. If we break to the upside there, the gold miners again is going to print money like nothing else. It's just going to be, they're going to be cash cows really, because that means that the gold price that they get out of the ground is, again, it takes less and less energy to get it, therefore, in relation to oil, more profitable. I know there are more things to consider, like, whatever, pay, what you call, salaries, machinery, yada, yada. But in this case, we're only looking at oil, right? And look at that continuation. Seems like we're breaking now this week. Lovely. What else have we that is interesting? Uh, Again, here we have Cameco divided by First Majestic. Again, look at the breakdown here, late 2020, right? And just Cameco smashing First Majestic. Cameco went up many multiples, and First Majestic got smoked. Now we're stuck in a range. At some point in time, this breaks out, right? At some point in time. If it continues, Cameco, if you opt to pick between the two, Cameco will be the better play. If it breaks down, then First Majestic will be the better play. And it's a good guide because Cameco is the blue chip of uranium, whereas First Majestic is the blue chip within silver miners. So it's a good guide of which sector to do the best, I think. I think that's it. I don't really have much further that is, interesting here. Oh, this could be very interesting. This is very interesting. Holy bananas. Look at that. Wow. So we can see here that actually this is gold divided by the Dow Jones. 2080. 2080, what am I saying? 1980, 2012, 11. We tagged it here. And what is happening now? For the past basically 10 years, 13 years, look at that. We could call this a head and shoulder bottom, right? And what is happening the past basically since 2025. In my view, this looks like some sort of, pullback slash flag slash, you know what I mean, and that we're gonna break out, and then gold will outperform the Dow Jones index. Huge milestone to actually be a part of. Look at that. We're going way, way back here. This is going back 100 years, basically. But now, when that breaks, gold is breaking out of a 50-year, roughly 40, 50-year trend line against the Dow Jones. You know what that means. That means gold will be the best play for I don't know how long, but 10 years is my view. 5, 10 years easily. Easily 5, again, closer to 10. Initially here, the target will be on top of that. That's the initial target, roughly 0.16, which also makes sense because that is a big pivot high. So again, we could be grinding up to there. Then we could have a pause for like a few years where gold is underperforming a bit, but again, is most likely recharging, and then you go again. Then you can do another measure on top, again, taking us back to the highs up here. Big moment and a big tell for gold if it can do that. So have an amazing day, guys. It's just been me splashing around charts here. Have a great day, guys, as always. Bye. Cheers.